Hey everyone, thanks for being here today. We know that you all carry the huge responsibility of stewarding the resources that God's given your church. That's really important work, and we're grateful for all the ways that you serve that a lot of people will never know. My name's Justin, and I'll be your host. This session's Fund Accounting 101, what every church needs to know. We know it's a huge topic, but today we'll be keeping it a lot of at the 101 level. So the basics that every church leader and volunteer should know. We'll have a chance to show a few tips and tricks along the way, and there'll be a time for questions at the end. But we're recording today's webinar, and you'll also get the slides afterwards. If you think of a question along the way, there's a Q&A section, or you can put it in the chat, and we'll make sure to take time to cover as many questions as we can at the end of this. But yes, but at PowerChurch, our heart's to give you practical tools that every ministry that makes ministry work clearer and easier. Jeff Campbell's here to lead us through today's session on fund accounting, what it is, why it matters, and how you can explain it to your board and leaders. Jeff, I'll go ahead and turn things over to you.
All right, great. Thanks, Justin. Like Justin said, hi, my name is Jeff Campbell. I've been here with PowerChurch Software for almost 35 years. And how many of you ever looked at a financial report in a board meeting and thought, I'm not really sure what this means? So you're not alone. We hear this all the time from churches. I currently serve as general manager here, and I have the privilege of working closely with our development teams for both PowerChurch and Empower. One of the reasons I've stayed here so long is simple. I love serving the local church. Over the years, I've seen firsthand how important it is for churches to have tools that take care of this, that take the stress out of administration, so pastors, staff, and volunteers can focus on people and ministry. And this really becomes especially true with having accurate accounting information. When the numbers are clear, leaders make better decisions, donors trust their gifts are handled with integrity, and ministry teams can move forward with confidence. And so that's what today is about. We're going to talk about what fund accounting is, why it matters for churches, and how to know when it makes sense to use it. And my goal is to keep this practical, clear, and connected to the real situations that you face every week. So we're going to start off by looking at the textbook definition of what accounting is, and then we'll kind of decipher that into plain language. And then we will use a simple picture to make fund accounting easier to understand. And then we'll take a look at some reports from PowerChurch and how all of that gets put together. So here's the textbook definition. An accounting fund is a self-balancing set of accounts that records cash and other financial resources, along with the related liabilities and changes, separated for a specific purpose in line with the rules and restrictions. This is the formal definition. It's accurate, but to be honest, it sounds like something only accountants would love. So let's work on making it a little bit clearer. So in plain language, an accounting fund keeps money for a specific purpose separate from the rest of your church's finances. So it tracks income, expenses, and balances so you can always know how much is available and that it's used as intended. So an accounting fund is simply a way to keep money for a specific purpose separate from the rest of your church's finances. Each fund has its own income, expenses, and balances, so you always know how much is available and that it's being used exactly as intended. In everyday language, a fund is simply a way to keep money separated by purpose. So if someone gives it for a specific purpose, we don't mix that with money for the electric bill, and we can also know what's available and how it was used. The easiest way to picture this is with a wallet and envelopes. Imagine your church's bank account as a wallet, and inside that wallet are several envelopes. One envelope is marked operating fund for everyday ministry expenses. Another might say missions for restricted gifts, and another envelope might be for preschool. All these envelopes are resting inside the same wallet. You're not opening separate bank accounts, but you're keeping the money organized by purpose. That way you don't accidentally spend food bank money or on the light bill or preschool tuition on mission trips. This separation builds trust with your board, your donors, and your congregation because everyone can see that the money they've given is being managed responsibly and transparently. All money is sitting in the same wallet, but it's in separate envelopes, so you know exactly what belongs to each ministry, and that's fund accounting. I've heard a story years ago where the seniors were organizing a bus trip, but when they were getting ready to leave, they found out the money had already been paid, that the money paid by the participants had been spent on other things. They did not have the systems or the record keeping in place to make sure that they spent bus money on they didn't spend bus money on other things. So you might ask then, why not just open a separate bank account for every time you have a new project or a new ministry? This might feel like this is the safest way to keep money separate, but in reality, it just creates more complexity, more statements, more reconciliation, more bank fees. And often the person who's in charge of that new project maintains the checkbook, so there's less transparency and the oversight of the money by church leadership. With fund accounting, you don't necessarily need multiple bank accounts. You keep one account, but inside of it, you have separate envelopes for each fund. You get clarity and transparency without extra work or cost. But fund accounting is more than just using fewer bank accounts. A bank account only shows you where the money is. It gives you a cash balance, but it doesn't explain the purpose of that money or whether it's restricted. To keep things separate, some churches end up with multiple accounts, which adds complexity but still doesn't give the reporting clarity you need. Fund accounting shows you what the money is for. It tracks the activity for each fund, income and expenses and balances, so you can see how the money was used. It ensures restricted gifts are used the right way and allows you to keep everything in one account while still generating detailed reports by ministry purpose. So think of the difference like this. Bank accounts answer the question, how much money do we have in the bank? But fund accounting answers the questions more like how much money do we have available for this ministry? And that might be amounts in separate accounts. That second question is what our pastors, our boards, and our donors really care about. Most of the time, a single bank account with fund accounting is all that you need. You don't need separate accounts for every ministry, but there are exceptions to every rule. You need a separate bank account when it's legally required. When you're for instance, when you're handling endowments, when you're running a capital campaign, often would have a separate bank account, or when you have a high volume ministry program like a preschool that needs its own banking flow. The rule of thumb is this: if it's about compliance, if there's a high volume of transactions, or if there's a need for major stewardship accountability, then a separate bank account will make sense. Otherwise, fewer bank accounts keep things simpler. So we're going to take a look at some examples over in PowerChurch. When we talk about fund accounting, it's going to help to look at some real world examples. We're going to look at a sample in PowerChurch that uses 3 accounting funds. The first fund is the operating fund. This is the church's main fund. It pays for the everyday needs of ministry, things like utilities, staff salaries, curriculum, and supplies. This is where your budget is set up. Our second fund we're going to have in our sample is a restricted fund. This is money that's given to a specific purpose. That money can't just be moved in the general budget. It has to be used exactly as the donors intended. The restricted fund keeps it separate and transparent. In our example, we're going to see how to track multiple donor restrictions all within one restricted accounting fund. And the third fund in our setup is a preschool fund. Many churches operate a preschool or daycare program. By keeping the income and expenses in its own fund, you can see whether the preschool is covering its costs, how tuition is being used, and whether the program is financially stable. Operating funds keep the ministry moving day to day. The restricted funds fund protects donor intent, and the preschool fund helps the church see the financial health of that specific ministry clearly. All right, so I'm going to switch over to PowerChurch now. Give me a second just to make that change. And okay, so I've switched over to PowerChurch now, and we're going to take a look at a few different reports. The first report that we're going to look at is the balance sheet by fund report. This report shows us what belongs to each accounting fund, and you'll see there's a separate column for the operating fund, our restricted fund, and our preschool fund. Now notice that our main bank accounts right here, the first bank checking, is shared by both the operating fund and the restricted fund. PowerChurch recognizes that this is the same physical account, because it offers this has the same account number. Let me rerun this with additional option here to show so you can see the account numbers. So notice there, this is account 1110. So 011110 is our operating fund with the balance that's there. The 021110 is the restricted fund with its balance here. Together, they have, in our sample here, $83,000 in them. So these accounts get reconciled together. The program treats them as if they're same physical account. So just like the envelopes we looked at earlier, this is our 1110 is the one wallet, and we have two envelopes inside of it. The 01 fund for our operating fund and our 02 for our restricted fund. Also notice, though, that the 01 fund has a CD, a certificate of deposit, in it. A fund can have multiple types of assets in it, not just cash. But now let's go over and take a look at our preschool fund here. It has its own separate bank account. Notice it has its own number. Its account, in this case here, it is Fund PS and account 1120. So this account here is PS-1120. That keeps the preschool finances completely separated from the church's finances. Looking at the balance sheet makes it clear on how much cash is available for the operating fund to meet its ministry needs. So we can easily come here and say we have almost $47,000 available in the operating fund. So the next report I want to take a look at is the income and expense by fund. Now, this isn't usually a report that you're going to look at every month, but it's useful here to show how income and expenses can also be shared across funds. I need to go ahead a couple of pages to page 4 here. You'll notice here, like payroll taxes, account 5205, is shared by both the operating fund and the preschool funds, and they both have payroll that comes out of them. And we'll also see here that there's some shared expenses here as well. So for instance, office supplies, account 5330 is in use by both the operating fund and the preschool fund. So even though the accounts are shared, we can get one total over here for our total office supplies. Each fund still maintains its own income and its own expenses, and this gives us transparency so that we can easily see how much money was spent by the preschool, but then maintaining overall things to see how much money was spent on office supplies altogether, and things like insurance and other ways. Now I'm going to also go run another version of the income and expense statement. This is the regular income and expense statement. And I'm going to now run this for just our operating fund. So I'm going to specify my funds here. So I'm going to say 01 to 01. So I'm now just looking at the income and expense statement for our operating fund. By selecting that fund, we run the specific income expense. This is a clean view of everyday ministry finances, what came in and what went out just for the operating fund. And on this fund, we see our budget numbers, our year-to-date numbers, and we compare to annual and so on. Now, we can also run the income statement for the preschool fund as well. So I'm going to rerun this again. I'm going to show you a feature in PowerChurch that not very many people use. You can save report parameters for something like this where there's a lot of options. I've saved my preschool, how I want my preschool income statement to look, so I can just recall it here. And now I run this. And so I have a completely different look to my income and expense statement for the preschool. I've just got 2 columns. We don't have a budget for the preschool. We just have a current period and year to date. So this helps us see exactly how the preschool is performing. So we go to the end, we can see what their excess income and expense, what their total expenses are. We go back to the beginning, what their total income is. So we can see how they're performing financially, just them, and separates it from the rest of the church. And similarly, we can also run a balance sheet just for the preschool as well. So I'm going to come up here and select the balance sheet, and I'm going to run this for our preschool fund, Fund PS to Fund PS. So this is the balance sheet for just the preschool. Now you'll notice, if you went back and looked at the balance sheet by fund, all the numbers here would match up with the balance sheet by fund. So this is showing us just the balance sheet of what's available to the preschool itself. Now, I skipped over the restricted fund because it's a little different. The restricted fund is holding money that donors gave for a specific purpose. In this example, each restricted area has just one income and one expense account. Instead of creating 3 or 4 separate funds, we group them together into one restricted accounting fund. Think of this like envelopes inside of an envelope. All the restricted money is in one big envelope, but inside of that envelope is smaller envelopes for each purpose. So I'm going to actually, instead of using income expense statement for the restricted fund, I'm going to use a report called Changes in Equity. And I'm going to run this for just my restricted fund. So it's O2 to O2. And inside of my restricted account here, I now see we've got 3 restrictions. We've got a restriction for a new sound system that we're taking up money for, a capital improvement project. This could be like repaving the parking lot, and also benevolence fund. So for August, I can see how much money has come in, or how much was our beginning balance for these, and what was our income for these. We didn't record any expenses in here, and then we can see what the ending balances, the ending balances are. So the change in equity makes it easy to track these. It shows you what was started and the ending balance, so you can always see what's available. I'm going to run one other report, and this isn't a report that you're going to run very often. It is the Chart of Accounts Fund Comparison Report. And this is going to show us what accounts belong to what fund. So there again, I see all of my accounts down here in the left, and in the columns over here, I see my funds, and when there's a square here, it tells me that account's available in that fund. This is a helpful tool for administrators because it clearly lays out what accounts are available for each fund, and it keeps the structure organized so reporting is accurate and consistent. So you can see PowerChurch doesn't help you just keep money separate like envelopes in a wallet. It also gives you the reporting tools to see exactly what's happening inside of each fund, whether it's day-to-day operations, for the preschool or the restricted donations. Fund accounting makes things clear and helps leaders make better financial decisions. All right, let me switch back to the PowerPoint presentation. Okay, so far we've looked at common funds like operating, restricted, and preschool. Those cover the basics of church life, but sometimes a church takes on a bigger projects. More advanced uses of funds can become important. So let's just give some examples of those. So these are more advanced uses of funds. So one of these is a plant, property, and equipment fund. This is used to track long-term assets like land, buildings, vehicles, or a major HVAC system. By moving these out to a separate fund, helps the church plan for big capital purchases and tracks improvements over time. It also helps by moving some of those things out of your operating fund, which impacts budgets and makes your budget reporting easier. Another example of a possible use of advanced fund is a payroll fund. So some churches have staff, especially if you've got a preschool, the staff member that might be paid partially from the operating fund and partially by the preschool. A payroll fund allows you to process payroll from one place and then charge the other funds for their cost of those employees. Another example might be a capital campaign fund. When you're launching a multi-year make sure we're still okay. Here, some people are saying can't see the slides on the screen. Let me take it off and bring it back on. Okay, so some people are saying they're seeing it okay. Okay, want to make sure we're okay. All right, let's talk about a capital campaign fund. When you're launching a multi-year fundraising effort, it might be for a new building or to pay off debt. You don't really want all of those other donations getting lost in your operating fund. The capital campaign makes it easy to show how much has been received, how much has been spent on those. Another example of a more advanced fund might be an endowment fund. If you've got an endowment, that's usually large gifts that are meant to last for years or maybe even generations. The church then invests that money and preserves the principal, but only spends the earnings. It's a way to honor the donor's legacy and fund ongoing ministry, like for scholarships or missions. And might also have a special projects fund. These are limited time projects with a lot of financial activity. For example, if your church is hosting a citywide outreach event or conference, a separate fund helps track that project clearly from start to finish. This separates the income and expenses associated with that project from the regular operating activities of the church. And our last is maybe a scholarship fund. Some churches provide scholarships for their students in need, and it segregates and keeps those gifts in their own fund because it makes sure the money that is spent separately from that. This would be like if you have receiving donations for that. If they're being paid out of general budget, then that really probably belongs in with your regular operating funds. But that's just another example. So the bottom line here for advanced uses of funds is this. They give you an extra layer of accountability and clarity when the financial picture gets more complex. And you can still zoom in on specific areas of ministry while keeping everything tied together into one accounting system. All right, so let's just talk about a few basic rules for fund accounting itself. One of the most important rules of fund accounting is that funds must always be in balance. Each fund is like its own little mini accounting system. It has its own assets, its own liabilities, its own income, its own expenses, and its own equity. When everything is tracked correctly, every fund stands on its own and stays in balance. So this is how that works in practice. Here on the we're looking at the balance sheet statement. What we mean by it's what we mean by it's a balance is you'll see the total assets equal the total liabilities and equity. If these two numbers don't match, that means probably a transaction has been cross-fund posted where you debited one fund and credited the other. If the equity numbers go negative, that's a big red flag. It means more money has been spent in that area than is available. For example, if the preschool had a negative balance, that would tell us that they have spent more than what they've received. Balanced fund gives us confidence that we're being good stewards. It proves we're only using the money for the purposes of what's given, not accidentally borrowing from one fund to the other. So the bottom line is this: in fund accounting, every transaction balances and every fund balances. If a fund doesn't balance, that's a signal we need to stop and investigate what's going on. Now, every accounting transaction, the debits and credits must balance within each accounting fund. Now, that means you can use more than one fund in one transaction, as we see in here on this transaction. This transaction is recording the deposit that was received from a Sunday morning, and we have money that's both being received by our general fund or operating fund for tithes and offerings, but we also have donor restricted money that is going into our restricted fund. So you can see here we have money going into our 01 1110 envelope for our tithes and offerings, and we have money going into our 02 1110 envelope for the amount of money that's received from those restrictions. So you can use multiple funds in one accounting transaction. Now, when you do that, PowerChurch will give you a warning, and that's this warning here. It's say the warnings, the debits and credits in each accounting fund do not there's two. This is the first one here. If your debits and credits are off, this says the total debits and credits in each accounting fund do not balance. So if I credited the bank account in 01 and debited an 02 expense account, I'll get this warning. At that point, you should always stop and go back, and you want your debits and credits to balance in each fund. Another warning you will receive is this one, and this probably is okay. It is just making sure that you know what you did. So if you see this warning when editing or creating a transaction, this message is saying, actually I have these backwards. This is saying, like on our deposit transaction, this transaction is using accounts for more than one accounting fund. Now, if it was like that deposit transaction that we saw originally, that's okay. We expect that because we know we have more than one. But if you were just recording an expense and say for your operating, and you saw this, there'll be a point to come back and check. Like, okay, did I accidentally use the 01 bank account and the preschool expense account? Or maybe it's vice versa. Like, I'm recording a preschool expense account and by mistake use the O1, the operating fund bank account to make sure that those are that I've been using the right accounts. So one of our other rules is keep funds simple and consolidated. One mistake places make is creating too many funds. Not every ministry or project needs its own accounting fund. That just clutters your records and makes reporting confusing. Instead, keep things simple. Only create funds when it's needed in its own balance sheet and income or expense statement. Smaller designations or restrictions can be grouped together inside a single restricted fund, like we saw in the restricted fund example. Think of it like envelopes in an envelope. You've got one big restricted fund envelope, and inside that you keep smaller envelopes for missions, benevolence, and scholarships. That way it still stays organized and gives you the accountability you need without overwhelming your system with additional funds. Another thing to remember is funds are for accountability, not silos. The purpose of a fund accounting isn't to separate ministries into little financial islands that never connect. It's not about competition between ministries or funds and making leaders feel like they're out on their own. Instead, funds exist to provide accountability and clarity. They help us show where money came from, what it was used for, and whether it's used according to the donor intent or not. So yes, funds are balanced separately, but they're all part of a bigger picture. That's the whole church. At the end of the day, it's not about creating barriers. It's about good stewardship and clear reporting. That's where reports like the balance sheet by fund help bring everything together. And then use the reports to tell a story. Fund accounting isn't just about keeping numbers in order. It's about giving pastors and boards and donors a clear picture of how resources are being used in ministry. When you run the balance sheet by fund or an income and expense report, you're not just creating paperwork, you're telling the story of how God's people gave and how the church is putting those gifts to work. Good reports answer questions like, how much do we have available for operations? Is a preschool covering its costs? How are restricted gifts being used? We can use these reports to help tell that story clearly, trust grows, and decisions get easier. All right, but finally, I want to pause here to just bring this out. This session is on fund accounting and it's meant to be informational. And every church is unique and every ministry situation comes with its own set of requirements and realities. What works for one congregation may not be the best fit for another. Some churches may need only a few accounting funds to stay organized. Some might not need to use separate accounting funds at all, while others might require more detailed structures. In certain cases, legals, grant, or donor requirements may guide the way that money is used in accounting funds. You have to think about your church's specific needs. The goal of today isn't to walk away with a cookie cutter plan, but to have an understanding of the tools to evaluate what will work best in your ministry. At the end of the day, accounting is about stewardship and clarity. How you should apply it reflects your mission and your people and your resources. Okay, so the next step here, as we wrap up, let me leave you a thought about this. Fund accounting is a tool for stewardship and clarity. So we've seen how funds work like envelopes in a wallet, keeping money organized for its purpose. We've talked about common funds like the operating, restricted, and preschool funds. And we've looked at some advanced uses like a payroll or capital campaign or an endowment fund. The key takeaway is this: fund accounting keeps ministry finances organized, transparent, and mission focused. It helps pastors, boards, and donors trust that the money is being managed and spent as intended. So what's the next steps? I might take a fresh look at your list, your current list of accounting funds. Are there too many? Are there too few? Could some be consolidated and more to like a restricted fund? Identify, do you need to use some advanced funds, like for a capital project or for an endowment? And then use PowerChurch reports to help tell the story. Use the numbers on the balance sheet or income and expense statement to tell the story, then share that with your board or your congregation to help them see the big picture clearly. My encouragement to you is this: don't think of accounting as busy work. See it as a vital part of ministry. Accurate, transparent finances free your church to move forward with confidence and focus on the mission that God has given you. Okay, so that's the end of our prepared presentation. We do have, I see there's some questions already in the Q&A, so if you do have some questions, please pop the questions in there. And I do have some questions that were sent in during registration, so we're going to take a look at those now while you send your questions to to us there. Okay, let me move forward to the first question here. All right, so somebody asked, can multiple cash accounts be reconciled as if they're in one account in PowerChurch? The answer is yes. treats them as if they're the same account if the middle four numbers, what's called the major account. In our example there, that was the 1110 account. If they have the same middle four numbers, it treats them as the same physical bank account. And when you go do your bank reconciliation, they'll all be included. So all the account 1110s and all the different funds will be pulled into one bank reconciliation. If we had a transaction like we saw with that deposit entry that it was used both in the 01 1110 and the 02 1110, it combines the total and you'll just see the total of that deposit when you go do the bank reconciliation. So the answer is yes, it does that. Is there a way for fund accounting to carry over fiscal years? We are currently keeping a spreadsheet of our designated funds as those funds do not clear out each fiscal year. So it'd be nice to be able to do this within PowerChurch. The answer again is yes. You in PowerChurch, the way we're talking about here, each of your balances for restricted giving is going to be tracked in an equity account. So the answer is to track a balance that's going to go over a fiscal year. It needs to be on a balance sheet account. And that's most likely going to be an equity account that you're going to put that. So you're going to create an income account and an expense account for that. There's a couple different ways that we might cover in a future way to do that, but those are both going to close to that equity account, and that equity account is going to control the balance for that. So yes, our example there in a restricted fund, that is set up that way that you can have that donor restricted money. It'll carry that balance over months and over fiscal years. So here's a question here. When is the fund accounting module scheduled to launch and empower? That's a great question, and that's one we've been hearing a lot. The honest answer is we don't have a date that we can share yet. What I can tell you is that it will not be in 2025. Right now, the development team for Empower is focused on building out the foundation. They're currently, right now, this week, working on bank reconciliation, repeat entries. The biggest area to still work on in Empower is reporting. We want to make sure that the reports are clear, accurate, and really helpful. And after that, there's still going to be a lot of testing and finishing work before we're ready to release it. We want to get it right because accounting is all about accuracy and trust. The first version of the Power Accounting will be the PowerChurch equivalent of fund accounting and accounts payable. Accounts receivable and payroll will come out at a later time after the initial accounting release. For those of you who are not familiar with what Empower is, here's a quick overview. Empower is a completely web-based version. It's a new product that we've been working on. You can access it anywhere from a web browser. So that's tablets, phones. All you need is a web browser. Currently, it handles membership and check-in and contributions. It also has the ability to create contribution deposits and PowerChurch Online accounting, just like you post contributions deposits directly inside of PowerChurch Plus. This means that even before accounting is fully built into Power, it already connects to the fund accounting PowerChurch Online, so you can use the accounting tools you already know. So I can't give you a date. I can say with confidence it's in progress, and we'll keep you updated as the development moves forward. Another question here is, when is it preferable to use restricted fund in the general fund, in our case, our 01, versus a separate accounting fund? Then how important is to use transfers versus direct changes into net assets? There again, this depends on what reporting you need. So the case to separate it out into restricted fund is it then can make your 01, your operating fund, or your general fund all about budget, and there is no non-budget numbers in the 01 fund. That's the case to separate it out into a separate restricted fund. So you can then run an income and expense statement for Fund 1, and all of the amounts on there are part of your budget. And you can then look at 02 for those things that are restricted that are outside of your budget. That's the case for doing it. Fund accounting does make the accounting more complex by adding a different fund or adding in multiple funds. If you're happy with the reporting that's inside the general fund, in knowing that you can still restructure things, so you can structure things in the income section and say, okay, this is all our budgeted income, and then create an unbudgeted income group account and put things underneath there. Same thing with your expenses, you can do that. So there again, the answer is it depends on what kind of reporting that you want, and there again, maybe how big of how many donor restrictions you have and so forth. The second part of your question was how important is to use transfer versus direct changes in net assets. at the end of the day, they both do the same thing, right? You're moving money from one accounting fund to a different accounting fund. By directly changing the assets, that does move the money from one fund to the other. But it's more about transparency. So if you use a transfer account, you will then see how much money came out right on the income and expense statement. You will see explicitly there, hey, the operating fund transferred money to the preschool. The preschool transferred money. Maybe the preschool is operating a loss, and the operating fund is making up the difference. It'd be very clear then on the income and expense statement that you would see those transfers being made. If you're doing it directly with to the net asset accounts, that isn't as clear. So that question there is more about transparency there and why the money is being transferred around. Another question that came in is, we've used PowerChurch since 2008. When it was established, our dedicated funds were set up as liabilities, and I realize that they should be restricted funds. That way we can see monthly activity. Is there any way to efficiently switch them to restricted funds so we cannot lose the history? Yes. What I would recommend before you make any kind of major change like this is make a backup and then play around with the changes and make sure you're comfortable with them before you do things. What you would end up doing is go ahead and setting those donor restricted areas up as equity accounts. And then when you're ready to cut over, you would just do a journal transaction that moves it from that liability. So it has a credit balance. You're going to debit the liability account that has the current balance of that dedicated fund. And then you're going to credit the new equity account that's the equivalent. With that, that's how you're efficiently just going to move things over. When you do your reporting, that leaves all the history there underneath those liability accounts. That is there. So if you went back and ran a report from earlier this year, you would still see the money and liability, but from then that point over, you would switch over and you would use specific income and expense accounts instead of that liability account to show money coming in and out of that restricted area. Okay, I already answered that one that got in there twice. All right, so that was the end of the prepared ones that we have. Let's see how we're doing. Pretty good on time. All right, so one of the questions, is it okay to use the due from general fund to record the difference between the Canadian dollar investments account and the US dollar investment? Both accounts are in the general fund. Oh, that's a really good question, and I'm not sure. I would have to research that and look into that before I would hesitate to give you a question. So I take it that you're keeping some funds in Canadian dollar and US dollars. I would have to check on that. I don't know right off the top of my head. I don't want to tell you something that I don't know. Another question is there support assistance to have accounting funds set up if there is a roadblock? If there's a specific roadblock, then yes, support can help you. Like if you need questions on how to set that up, in general, support can answer how-to questions, not should-I questions. So if there's a question like, hey, I'm not sure how to set this up, or maybe this account doesn't have the balance that I expect, or how do I move this account balance? Those are how-to questions. Should I set up a separate accounting fund? Support can't directly answer that question. And that's where having a relationship with like a local accountant who's familiar with church accounting, because church accounting is different than most local business accounting. Most local business accounting. That's there. So find a local accountant or bookkeeper who's familiar with church accounting to help you answer some of those should-I questions. There is a question here about, is there a way to record gifts in kind in PowerChurch? Now that's more of a contribution reporting question there. PowerChurch accounting, the PowerChurch contributions is meant for cash donations, things that you would send receipts for. Our general advice for if you got a gift in kind is going to be, somebody donated 10 gallons of paint or picked up the meal for the youth group. That kind of thing is you just provide them a nice letter saying, hey, thank you for your gift of this, attach a copy of the receipt to that letter, and then that provides them with their substantiation that they need for their tax purposes. But you're not really recording things within the contributions module to handle those gifts in kind. All right, so the question is, can you explain the close to setup and how those work? Does balances get moved from one account to a close to account? We might come back to that at the end. So the answer is yes. So each income and expense account closes to an equity. So you think of it this way. The equity account shows you the difference between what you brought in and what you spent. So so our income account closes to an equity and our expense account closes to an equity. So if those both close to the same equity account, that'll show you the difference between what was recorded in that particular equity and what was spent by that recorded by the income account and recorded by the expense account that both update that equity. There are some other things that you can do, like PowerChurch has a whole process for being able to have a separate area for donor restrictions, and you can release money from restrictions. That's a separate topic that's more we can cover in today. But Barbara or Barb, let us know if you have other questions along, but that's it in a nutshell. Then there's a question for budget reports. Does the four middle numbers of a fund create the group? The four middle numbers are the account number. The first two numbers are the fund. The middle four numbers are what we call the major account, and the last three numbers are the sub account. Most budget reports work off of the middle four numbers, and the ending three-digit number together. So if you had a budget for, I'm just gonna make up a number like account 5470001, you could put a budget on that, and account 5470, same middle four numbers -002. The program will treat those as two separate accounts, and you can budget each of those. The main thing with the middle four numbers being the same is for bank accounts, and that's how the program knows that those all belong in the same physical bank account as well. All right, there's a question here. We have a generosity campaign for a lobby refresh intended to run no more than 90 days. It'll be donated and spent within the same reporting calendar year. Do we need a separate fund for this, or can we account for it as a restricted income and expense account under the same accounting fund? Okay, there's a little more detail there. If it's in the same year, and it's that small, and there's not a lot of expense accounts that are going that, you could account for that all in one fund. I wouldn't necessarily set up a fund for it. I would, possibly make sure I'm reading again, but donate and spend the same year. Do we need a separate fund for this, or we account for it as restricted income and expense account under the same fund? If it's that and it's not going over years and you're happy with the reporting, if you're putting in your operating fund, there again, that would then kind of impact your reports for budget, because it's going to be kind of in the income. If you just look at the bottom line of income, you're going to then see a budget numbers that are there. That's possibly one of the things. If you already have a separate restricted fund and you're putting it all over in that, then that's the case. If it's that small, it's kind of going to happen quick. You could put in a restricted fund. If you left in the operating fund, it's going to kind of change your bottom line numbers about budget, but you can pretty easily create a separate group to say, hey, this is non-budgeted income, and get a total for that. So the question is, PowerChurch set up as cash basis. Diocese wants them to start using accrual basis. Can I do that in PowerChurch? PowerChurch is designed as a cash basis system. We found that that's how most churches actually operate. If they really want you to do things on accrual basis, that's largely going to be due to things like credit cards. You could then start putting in like the credit card purchases of when they happen. Really the difference between cash and accrual for most people is when do they recognize the expense. An expense and accrual system is you recognize the expense when you incur the bill, not necessarily when you pay the cash. But yeah, PowerChurch is designed as a cash basis system, especially coming from accounts payable. It doesn't put the entry in until you actually pay the bill itself. Another question is, can you speak more about how to make different restrictions within a fund? I have just been making separate funds, but it seems like that's not the best way. Let me circle back to that because we might just drop into PowerChurch demo for it. And the other question, does every ministry need a restricted account? The question there is, does every ministry, how is it funded? If it's funded solely out of the operating tithes and offerings and doesn't have its own donations, then no, it doesn't need its own restricted account. Kind of going back to a little bit of the example before, one of the things that I've done with my church here is we have the youth department and they have raised money, or they have a fundraiser. We know all of that's going to be spent in this year. I just created an expense account and to bring that income in. It's going to show a negative balance, but we would see, hey, we budgeted, I'm just going to use round easy numbers, $5,000 for youth, but they've had a fundraiser that raised $1,500. Well, that's going to show as a negative $1,500. So it sort of backs out, and then kind of gives them an additional $1,500 in there. So it's not really it's brought in as the accountant term would be a contra expense, but it is brought in as a negative expense that shows that, hey, they raised money, they have an additional $1,500. So the answer to the question of like, hey, does every ministry need a restricted account, is it depends. You know, if there is donations that are coming in for that account that are fairly major and ongoing, and we expect to carry those balances over from one accounting year to the next accounting year, then yeah, you're probably going to need to set up a donor restriction or an equity account for that. You know, things that are long-lived, like we looked at, like, hey, we're receiving money for the new sound system, and it's going to take us 2 years to have this money, or we have a benevolence fund that's an ongoing project. You know, that we would need a separate restrict. But if it's something like, hey, we're sending kids to camp and we had scholarship monies going into camp, we know that's going to be used this year, you could possibly track that as a donor restriction. There again, I'm kind of going back to that. We're talking in broad generalities. I don't know enough about your specific situation to give specifics there. All right. Another question is, if I want to move using the example of a building fund from the restricted fund to a standalone, how can I do that? In that case there, what you think is you're going to go ahead and establish the chart of accounts for your restricted fund, and then when you're ready to cut over, you're going to do an accounting transaction that would take, I assume there's already money in the restricted fund with other funds or with other restrictions. You're basically going to take the money out of that bank account, and this is one of those cases where you would directly charge to the equity account, because you're basically moving money from one fund to the other. So in that case, you're taking money out of, and I'll just use our examples here. Say we're setting up in our chart of accounts example setup, we set up a fund 03 that's going to be our new building fund. So we're going to take money out of our 02 of bank account. So we would credit our 02 1110 bank account, and then we're taking out of that fund. So we're going to then debit our 02 equity account. So for the building fund restriction, that's in the restricted fund. Now we're putting that money into fund 3. So we're going to debit our 03 bank account. Now keep in mind, there's no money physically moving in the bank at this point, right? This is just all on our books. And then we're going to credit that 03 equity account that's going to hold that balance. So that's how the nuts and bolts of that, how that accounting transaction. Going back on the other questions earlier, this is a time that maybe I would use the net asset or the equity accounts directly, because we're just basically making a paper move to do things where it's not really, hey, the operating fund is giving this other fund money or vice versa. And there's a question that says, how are grants kept separate from 101 files? I'm not exactly sure what you mean there here. Oftentimes, like grants, you could either set up as a donor restriction or as possibly a separate fund if there's a lot of activity that is going on with it, and that would let you keep track of your balance separately there. That's you would basically keep track of a grant just like you would a donor restriction. They're depending on what the requirements are of that grant. What requirements are, if they require to have separate reporting, then maybe that's a case for separate fund. If it is a relatively small grant, you just need to prove what the money was spent for, then it would handle that basically just kind of like a donor giving the money that's there. So some of that grant is what is legally required for that grant. All right, so I think we've addressed most of the questions there.
Yeah, I think if you scroll up, there's been a couple new ones that came in, but
Oh,
if we have
okay.
time to.
So this is new. All right, so if I cross post an amount on my balance sheet is off, what's the easiest way to find it? Yeah, it's not really easy to find it. What you're going to be looking for is looking through accounting transactions that are off period by period. So what I would start with there is start running a balance sheet month by month to narrow it down when that happened, and then start looking at all the transactions that affected. Like if this is the bank account, that was look at the transactions. You're looking for accounts that debited one fund and credited the other in those. So there's not a great easy way to find that when that happens. If a transaction gets cross posted. Another question is, if I have to reverse and correct an accounts payable entry, it says the change will not change fund accounting. What does that mean exactly? It's usually the other way around. So if you are in, if you're in fund accounting and you've gone in there and let me back up. So you've wrote a check or you paid a vendor out of accounts payable and you posted that entry over to fund accounting. Now there's a problem with it. You've gone into fund accounting, probably to the maintain list of posted transactions, and you found it there and there's a button that says reverse and correct. What that's not doing is it's not going back and changing the original entry in accounts payable. And that's generally okay unless that's a vendor that you're putting a 1099 to. Now, if you're changing the amount, like, say you recorded it for $500 and it really supposed to be $50, accounts payable doesn't know about that change and it will issue a 1099 for $500. So that's really what's giving you the warning there. So that's why it's best to go back to accounts payable and make that change back in accounts payable. That's there. So, and that's why that's why you're getting that change. And it's better to go back to accounts payable in that case. So that you're getting that warning because you're changing the transaction over in fund accounting where originated from accounts payable. Okay, so the question back to the how related to my previous question, how can I track donors who donate specifically to the lobby refresh? There doesn't seem to be a way to segregate separate gift categories, benevolence. So in this case here, like tracking those specific gifts is going to be done in the contributions module. So contribution funds and accounting funds are two totally separate things. They just share the word fund. So you would create a lobby refreshed contribution fund. So everybody who's giving to that lobby refresh is recorded there. Part of setting up that contribution fund, you're going to tell it where that money gets sent to over in the accounting side of things. So you're going to tell it, hey, it's going to go into this income account and it's going to go deposited into this bank account. So that's, somebody else already answered the question too. Thank you, Celia. That's the answer to that. So yeah, contribution funds, accounting funds, two totally separate things. They just share the word funds. Question here is, when would you choose not to post to fund accounting? I assume we're talking about contribution types of things. It's pretty rare. It is pretty rare that you would not. This might be, if that contribution has already been accounted for separately over in fund accounting, so you might choose not to post contributions in that case. It's pretty rare that you're not going to do that. There's going to be specific instances and you're going to kind of know it, and those things will be posted separately. All right, so another question here, is there any plans for a new version of PowerChurch to be released? Yes. It is not official. We're still working on the release date, exact release date, but version 15 of PowerChurch will ship this year. We're doing final testing now. It is planned to come out by the end of the year. If it doesn't, please don't come and lynch me or come, come with pitchforks and so on saying it was going to be there. They are working on version 15 of PowerChurch for release. Like I said, the support team's doing the testing now, and we are in those phases of a release yet. Oh, good question. How to report a metal building donated to us for a future construction project we are about to start. that is one of those, you just send the donor a letter. Hey, thank you for your donation of this building. Obviously, you are not in a place to value what the building is. You're not going to record that in. I assume this is like the parts for a metal building. You're not going to record that in the contribution module. You just send them a very nice letter saying, thanks for your donation of this thing. It's then between them and their accountant and to figure out what their tax treatment of that is, and for them to figure out that value of that. You are not in the position of being an appraiser to know what that value is. Okay, so the question is, how do you account for unrealized gains or losses in an investment account? Our church will be opening our first one in October with a large donation. Similar kind of thing. So typically you would have one asset account that, let's just say, just keep numbers easy, it's $10,000 investment that you're putting. Underneath that, you would create an unrealized gain or loss on investment. So I'm making up numbers here. This is gonna be account like 1910. You would then create a 1911, or you could possibly even think about using a sub account here, like 1910-300 or something like that. And that would be unrealized gain or loss on the investment. And you, as that investment fluctuates, you're either going to post money going into and out of, and then you would have an income or expense account that says unrealized gain or loss on investment. So monthly, as that changes, you're just going to post an entry in there to basically true up what the current value of that investment is. But do it as a separate, do the gain or loss as a separate line, so you can always see what the initial investment is and then how it's doing. So to try to make that clearer, Susan, basically you're going to probably have at least 3 accounts. You're going to have the original investment amount, and then an account with that's also an asset account. That's going to be the unrealized gain or loss on it, and then an income or expense account where you're going to post the fluctuation in that account too. That's generally how you would handle that. They're going to suggest you work with a local accountant on your specific needs, but in just broad general scope, that's generally how that's done. Is there any other? There's been a few more that's come in. We're going to be cognizant of your time, so I know we're running up on 4 o'clock, 4 o'clock Eastern. Will there be a way to import contributions from Tithely like we can import Vanco? Tithely will have a file import that you can download a file from Tithely and import. I know they do. They mention on their website that you can import in a file from there, but it would require you logging into Tithely, downloading the file, and then uploading or importing that file into PowerChurch. So that's available to you now. Beyond that, I really can't say. We have not talked to the folks at Tithely, but you can do a file-based import from Tithely. Is there an easy way to change an account number in accounts payable so it's correct in fund accounting? You can change a number in accounts payable if you're talking about like you have a vendor and what account they get normally paid from. You can go in and change that. That won't change history. There is, if you were talking about like you paid a vendor out of a wrong expense account, there is an accounts payable. There is a reverse option there is a reverse option in accounts payable that you can reverse out a payment and then basically re-enter it as well. And try to make sure I don't see any other new things here. So again, I want to be cognizant of your time. Anything else, Justin?
No, I think that's been it. I feel like everyone here has earned we need to send a diploma along with the replay of this, because you've just set in a lot of awesome content. So thank you, Jeff, for leading that. And it's also really cool. I think this is the first time we've done a webinar that's brought like the PowerChurch family and then the Empower together. So it's been kind of cool seeing that, and even in the chats, like you're answering your own questions. So that's what we're trying to create here, like a community of churches helping churches, because it's easy to let the numbers just be numbers, but in reality, there's people connected to those numbers and stories connected to those numbers that matter to God. And yeah, so we hope this was a valuable resource for you and your team. We'll send a follow-up email with information with the recording. We'll send the slides with it, and there'll be a short survey on that. Please take just like 1 to 2 minutes and fill that out, because even in this conversation, I'm pretty sure any of the points that you hit, Jeff, could probably have been their own webinar. So let us know any of your struggles or things you're curious about, and we'll try to cover those in future seminars. But yeah, for PowerChurch and everyone else, we just want to thank you for what you do. You are seen and valuable, and we will see you next time. Thank you all so much.
Thank you, everybody. Thanks.